Yeah, absolutely, and it's quite a relief. I got to tell you, given at the size in our portfolio. That being said, I think the main takeaway from this week is that secular forces always win over cyclical ones, and then we had this fear in the first half of this year with technology, where the growth rates were slowing. How much of that COVID bump was artificial, and how much was here to stay? And I think what we're seeing is that the best and brightest, the demand is really here to stay. And there's a reason when you look at the FANG, we drop the F and the N. We don't really talk about that anymore, because what you're seeing, I think what we're going to see increasingly is that valuation accrue over to the platform side, the true platforms. Like with Amazon, you're paying for delivery. With Apple, you're paying for privacy and service. With Facebook, you're paying for free scrolling, and Netflix, obviously, it's just a subscription service. So I think platforms will win, services will suffer valuation-wise, and we're seeing that accrue with Apple and Amazon last night and today.
Yeah, so Amazon, you've made your case. We've talked about that one before. Mm-hmm. Obviously, people were worried. Why do you think they did manage to buck the broader trend that we're seeing across retail, where there are massive headwinds? Does that piece of their business just not matter?
I think we think about Amazon in terms of Prime, the Prime flywheel. What am I paying for as a customer for $130, $140 a year? You're paying for time savings on the retail side and a whole host of other services that come along with Prime, from media to grocery to gaming, whatnot. So at the end of the day, this is a company that can continue to propel that flywheel forward. And they did exactly what they said they were going to do. I mean, if you read the first quarter transcript, the CFO on the call said, "Do not be fooled by the revenue growth numbers that you see." I mean, so there was every reason to believe that revenue growth would reaccelerate back to its historical sustainable averages of around 20%. They guided to 21% if you back out FX at the high end for 3Q. So ultimately, the revenue growth is coming back. The demand was not artificial. It's here to stay. And most importantly, the cost focuses in the right sizing of the operations to be able to drive leverage in the model now and down the road.
All right. And if I'm not mistaken, you think the stock's basically a double in the next couple of years. What about Apple? How much upside is there? Do you like it as much as Amazon?
I like it as much as Amazon, but we don't own as much of it as Amazon, just given the fact that obviously the valuation, it is fairly valued, we think, but obviously there's continues to be earnings power there. I think that the demand, just like with Amazon, is there to stay. And the customers, the way we think about it, is that the lifetime value of an Apple customer is far greater than any other customer for any company in the world. And that will continue to grow over time. And obviously you have the share repurchases and whatnot. But at the end of the day, you do have to keep in mind the valuation as well as be cognizant of the market cap. So we do think we're continuing to hold the position, but only see about 10 to 20% upside more from here.
All right. A final word, James. What about the rest of tech?
Rest of tech. I mean, look, whether we're in an actual recession, how bad it's going to get, we're not sure. I don't think anybody really truly knows. But during times of economic uncertainty, growth is scarce. So we think that dollars will continue to flow toward the highest quality tech names, the companies that are proving now in the second quarter that this growth was real, the demand is real, and that the sustainable averages on the growth curves are intact and the scalability of the businesses are there. So we think that the company, as long as you're surgical, there's a lot of opportunity in tech, and that we continue to be very long and very bullish. All
right, James, thank you. James Cakmak. Now, with everything he just described, let's pivot to talk about some of those that aren't benefiting, like Intel and especially Roku. Julia Boorstin and Mountain CEO Mark Douglas are here. Julia, a slowdown in ads, a theme again for Roku.
Yes, that was one of the main factors that was cited by Roku's CEO when he explained the fact that not only did they miss both earnings and revenue estimates for the quarter, but they got into much lower results for the third quarter. And they couldn't even sustain any outlook for the second half of the year, looking towards the end of the year. And they just said they are seeing a broad-based advertising pullback, indicating that across various sectors, they're seeing advertisers take a pause. And one thing that I think is really interesting, Kelly, is this idea that advertisers may have committed a lot during this upfront ad sales period, even to Roku, as well as to others. And now when they have the opportunity to not do any spending in this last minute or scatter market, that's where they're saying we're going to take a pause until we have more insight to what's going on with the consumer. And
Mark, is this, this is so reminiscent of the discussion we had around Snapchat. As we reach this juncture of earnings where we've heard from Meta, we've heard from some, from Google, what is the key takeaway for you here?
Well, I think it's a lot more nuanced than Roku is stating. So the way life works is you're in tough times, you try to optimize all your costs. And so that includes marketing. When companies look at their marketing expenses, everything close to the consumer is actually going to be left alone, even possibly increased. And the things farthest away from the consumer are going to be cut. So Google paid search is closest to the consumer. It's first step, it's last step, and potentially often first step leading to purchase. And brand advertising is furthest away from the consumer. So most of the cuts that a company is going to do is going to be on the brand advertising side of the business. And that's what is affecting Roku. So it's not as broad, it's broad for Roku. It's not necessarily as broad for Google, and Facebook fits somewhere in the middle. Meta fits somewhere in the middle.
Shepard Smith here. Thanks for watching CNBC on YouTube.